Hi everyone.
Hi.
Hi.
So I think we can start our discussion now.
So basically our project is containing three parts, which is A, B and C.
Yes, and we are given trial balance and additional information.
We need to make adjustment, right?
Yes, right, Sarah.
Okay, so let's proceed to the instruction.
Okay, for this part, we need to prepare the statement of profit or loss, other comprehensive income, statement of changes in earnings equity, and statement of financial position for ZAL Enterprise based on the unadjusted trial balance as of 31st December 2023.
I think let's discuss the statement of profit or loss first. Yes, that statement will start with sales. We have a few deductions to consider like sale return and allowance and sale discount.
Right after those deductions, we arrive at the net sales figure. From there, we'll move on to the cost of merchandise sold to determine our gross profit.
Once we have the gross profit, we can list down all the expense mentioned in our data.
Absolutely. We will have to sum up each expense category from advertising to utility expense to get a comprehensive total.
So as we calculate the total expenses, we should also ensure that no category is overlooked. Attention to detail is crucial here.
After we have the total expenses, we will subtract it from the gross profit to find the net profit or loss profit.
Okay, next is statement of changes in owner's equity for ZAL Enterprise for the year ended 31st December 2023.
We will begin by identifying the Zala Rashid capital as of 1st January 2023.
Following that, we will consider the net income for the year. It's essential to factor in both the positive and negative impact on equity.
Alongside the net income, we will also account for any withdrawal made by Zazala Rashid during this year, and this will help us determine the overall change in equity.
So the objective is to calculate the increase in owner's equity, which will give us insight into the growth or reduction of the owner's stake in the business.
Okay, then once we have the increase in owner's equity, we will combine it with the beginning capital to determine the closing capital as of December 31st, 2023.
This final figure will represent the owner's equity position at the end of the year, reflecting the cumulative impact of business operation and capital movements.
It's worth noting that the statement of changes in equity provides a comprehensive view of owners of the owner's financial interaction with business throughout the year.
Indeed, understanding these changes in equity is crucial for stakeholders as it offers transparency into the financial health and performance of ZAL Enterprise.
So the last one is the statement of financial position for ZAL Enterprise as of 31st December 2023. Basically, this statement follows the equity equation. So the asset equal to liability plus owner's equity.
We will start by examining the assets, specifically the non-current asset, which include office equipment, delivery van, and long-term investment.
It's crucial to consider the accumulated depreciation for the non-current asset to determine their net carrying amount. After we have assessed the non-current asset, we will shift our focus to the current asset, which encompasses cash, account receivable, merchandise, inventory, and various other items.
The total of this asset will give us the company's total asset, reflecting both its long-term investments and short-term liquidity.
On the liability side, they're divided into current and non-current liabilities. Current liabilities include items like account payable, salaries payable, and interest payable.
Additionally, we need to consider non-current liabilities, such as not payable, to understand the company's long-term financial obligation.
Once we have reviewed all the liabilities, we will examine the owner's equity section, specifically Zazala Rashid's capital.
Combining the liabilities and owner equity will provide us with the total liabilities and owner's equity. Balancing the financial position of Zal Enterprise, balancing is a fundamental requirement of these financial reporting standards, and also this is a proof that companies' financial records have been accurately and systematically maintained.
In the same part A, we also need to prepare the cash account of Zal Enterprise based on the above unadjusted trial balance as of 31st December 2023, including 5 items in the additional information, and determine the cash balance as of 31st December 2023.
As we know, cash accounts must start with balance BF, a balance forward of 1st January 2023 on the debit side because cash is an asset.
Yes. After that, we move to the first item which says Zazala Rashid made a cash withdrawal. Withdrawal refer to the taking money out in the form of cash. It is clear that the withdrawal is on the credit side of the account.
That's right. So second item is that the enterprise received cash from the disposal of an old van, which means the money goes in. So it's clear that it's on the debit side, which is called a disposal van.
Next was Zazala Rashid, who invested additional cash to increase her stake in Zal Enterprise, same as the above, which is cash goes in, but it called capital because it is invested by the owner into the business.
Absolutely. But the next item is the opposite of the second and third, which is Zal Enterprise bought land for future operational expansion in cash. Bought land means money out to pay for the land, so it is clear that it is on the credit sale called land.
Okay. Item number 5. Last item is the total cash receipts and cash disbursement from the business operation given. Cash receipts are the money received from consumer, and cash disbursement are money paid out to the individual. It's clear that cash receipts are on the debit side while cash disbursement are on the credit side.
Finish the item in additional information. We can calculate to find the ending balance, but before that balance, both sides by knowing which side has the higher added value. In this case, the total debit side is higher than the credit side. So that debit total minus the total credit side, and we get the ending balance of 31 December 2023.
Yes, so our discussion for part A is over.
Next, financial statement commissions for Zal Enterprise. First up, the 35,000 ringgit depreciation on office equipment and delivery van. Any thought?
If we don't record that, our asset will be overstated by 35,000, right?
Correct. And it could potentially inflate our net income if not adjusted.
What about the 200,000 ringgit in unpaid salaries? That a significant amount.
We need to account for it. If not, our net income might appear higher due to understated expenses.
I'm looking at the unearned revenue of 7,800 ringgit. How does that play into our balance?
Unearned revenue is a liability. If we have realized it without recording, it messes with both our liabilities and revenue, affecting net income.
There's also the 40,500 insurance that expired. That should be recorded as an expense. Should it not?
Yes, Izzah. If we skip that, we're misleading stakeholders about our actual expenses and consequently our net income.
And the missed invoices of 24,400 that affects our accounts receivable and revenues.
Right. Not billing a customer for such an amount can distort our asset and revenue figures.
What about the 15,800 interest revenue? We can just let that slip, can we?
No, actually, it's crucial to record all earned revenue. Missing out on it would impact our revenue recognition and net income later.
So lastly, the misplaced supplier invoices of 135,000. That's significant. What happens if we don't account for it?
That would mean understating our liabilities and misrepresenting our expenses. It is essential to correct such an oversight.
Finally, we have come to our final discussion, part C. How can we advise Zalzala Rashid for the appropriate credit terms for Zal Enterprise? The objectives are clear: increase sales, manage credit risk, enhance cash flow through timely collections, and align credit terms with our inventory turnover.
Okay, so my recommendation is that maybe Zazala can use a standard 30 day net credit period because her enterprise can balance customer attraction with guarantee timely payment by providing a standard 30 days net credit period.
Offering early payment discount also can encourage early settlement and accelerate cash inflow.
But another way is to give customer explicit credit limits based on customer capacity and a thorough credit application process.
Now, move on to the appropriate shipping term. My opinion is that Zal Enterprise can include free shipping for larger sales and a flat shipping fee for accounting simplicity.
Expenses can be lessened by applying customer pickup.
Collaborating with third-party logistics is also important to improve delivery times and inventory management.
Great. So we already got a few recommendations we can use as answers. So these strategies will influence not only sales and cash flow, but also the overall efficiency of operations. So in the report, don't forget to add more explanation for each answer, okay?
Okay, so I think that's all for our discussion today.
Yes, and everyone, don't forget to do your part, okay?
So just reminder for everyone, the submission will be on 7 January. So hope everyone can submit your part by 4 January.
Okay.
Okay.
Okay,
Thank you, everyone.
alright.
Okay.
Bye everyone. Good
Bye.
night.
Bye.
Bye everyone. Bye.